Good afternoon, traders. It's E from MarketWizards.com and eMiniWizard.com, and it is Sunday, the 7th of April, 2019, and I'd like to do a quick update and a reminder, please use risk capital you can afford to lose if you're playing this game. Risky business. And probably the question on everybody's mind and will be tossed around for a while is, so are we still going up or are we going down? And obviously no one has a crystal ball and no one knows for sure. But we make our best guess and we try to see patterns and understand where support and resistance are. And then make our best guess. And if you're trading and taking a shot at it, then you should have an appropriate stop loss when you're wrong. And that's the hard part of trading. Sometimes you'll get the target you want, but you're either out of the market because you're on holiday or sleeping or whatever, and so the market does what you want, but not in the time frame that you can participate. And that's part of trading too. Here's a look at last week's predictive chart. The OTF is a larger time frame predictive chart. Basically, it said if we're above 51.5, 52 area, the market would be bullish and would be attempting to step by step get to each of these different levels. And that's how we read this chart. And obviously, if it was underneath coming this direction, then it would be seeking support step by step. And we try to read the tea leaves and find one step at a time where the market seems to want to make some type of a decision and then break out or break down and come back and test support. So that's why I like to use this bigger chart. And this is a reflection of last week's trade, and you can see that gap up. I think that's a pretty important area going forward. Everybody is going to try to figure out, well, we taking profits here, or are we going to go get new highs? And I'm just going to make a simple observation. I hope that it makes sense. And that's going to be that gap is supportive until broken, obviously. And probably from where we left off on Friday, we probably have an equidistant move to come back into test, this low or that high. We're about 50 points away from that high that we had a year ago. So probably equidistant move from right where we are. And this is a perfect conundrum where they've left us. Just figure 50 points back or 50 points up, and who knows? So we're going to take it step by step, and we'll see. But those type of relationships should be something that catch your attention. I noticed Pax Trader 777 made a nice post about mentors, and I do agree with him that certainly mentors are helpful. I think there are some people who are built to try to learn on their own, but I don't think that's the normal population. I think most people would best be served by finding someone that'll help them find shortcuts, and so you don't have to reinvent the wheel. And then those traders will find ways to improve your work and take your ideas. But I do think they need to be relevant. I do think those mentors should have kept up with today's technology and the algorithms and the ideas of bots, because the things that worked 20 years ago don't work anymore. And the ranges are so much different now that a 1% move is still a 1% move, but the travel range throughout the day is much greater than it used to be. There were days when I started where you were happy if you got 8 or 9 points range out of a day. So, and now we're totally dissatisfied with that type of a range. So I think there are adjustments that need to be made, and you can't just rely on a mentor from the past, especially if they've lost touch with the market. And I guess we're all familiar with those who would, it's perhaps unfair, but it's really fashionable these days to knock, quote, gurus. Anybody would try to teach or share their ideas with somebody else. But I do believe it's a shortcut, and that's the risk we take when we try to help somebody else. As I said before, there's no sense in reinventing the wheel. Here's a look at what I was looking at on Friday, and once we're above this blue line, and we never know if it's just going to go over and under, but once we're solidly back into it and pushing off of it, it kind of gives us a kick to the upside, and we know where this trade ended. And at the time, the other morning, these were our targets that we had already understood were perhaps coming to be, and paid for sure by that 82 to 85, and that had been quite a long push, and so we're just saying ride this trend while the boys are pushing. Don't fight them. We know we're going to be wrong at some point at the top, but in the meantime, while you're playing that trend, you're printing it, and you're adding to your reserves, and you'll have a better chance when you do miss it to say, okay, fine, we missed the top, let it bounce, and then we'll hit a bounce and see about catching a ride, or jump in and go with the flow if that's what it is. Well, I think these charts, some of them that I use, and I look at different time frames and different swings and different ideas, and they give me an edge. For some people, they don't like charts. They just want to go their order flow, and that's the beauty about trading. You can pick your own style and the own way you want to do it. But these charts are very helpful for me. And typically, by the way, I will share that once we overcome those resistance targets, note how at the end of the day on Friday, I turned my mind around and said, okay, these are now supports, trying to get to that 98 target to 01. So that's part of trading, is understanding that these relationships will be something that's defines a range, but if that range gets busted, then you can kind of turn around and say, okay, these were violated, and now the market is moving up and up, and I think we can use those now as support. And there's a 5-minute RTH, and this will give you that sense right here. This was that initial high at 93. And at the end of the day, we're trying to hang and stay up above, and that's where I said, I think we can still get that one more high. And that's where we just turn that previous resistance around and say, okay, this is trying to become supportive right now. And I'm not saying that our work is better than yours. It's just different. There are a lot of people you can learn from. But why reinvent the wheel? This widget that I've come up with really is helpful. And I use this for stocks and indexes and whatever. And at the end of last year in December, we had noticed this chart. This was the primary chart that I was using. And at that time, I was trying to understand the 2-year range and where were we in that pullback. And you can see how this bottom level, this green support level, held within 5 points. And after that, we've never looked back. And we bounced very strongly. And now we're back up here doing a retest at the 2,900. This is a very significant chart for me because it helps me see step by step where these ranges are that we have been fighting. And last week even, take a look at the 2769 area, and that held. Remember how that held last week? And then we said 71. All right, let's just figure 69 to 71, that holds. And then we get up here to that 58 zone, and that holds. So step by step, I can see these rotations and try to put what I call market structure and give some meaning to these type of moves. Here's a chart like Google. We do anything we want with these charts, and we can understand ranges and inside ranges and breakouts. Just looking at this, here's a 1122, 1, 2, 3, third time through trade right here. Bang, you can see it. Don't even have to study this chart. Just take one look and say, okay, I get it. Support for now, resistance. Amazon. Change the name. Have your study on and go pick it and say, okay, show me what's support. Show me next resistance. Next resistance. Show me patterns. You can see some of these old leaders still trying to lead. Apple, undercut low, and takes off and goes. Takes out its middle from last year, closes, trying to close this gap right up here. You can see the gaps remaining. You can see this gap, the support gap down here, 160. So one quick look, and then you can change these and put anything you want. But side by side in the yearly without a lot of clutter, very helpful. You can see the gaps. You can see targets. You can see support gaps. You know, obviously until this 170 breaks support, 175 support. Facebook, crash and burn. Takes out its trend line, downtrend line, starting to build, coming the other way. You can see your W right here. 1, 2, 3, third time through at 171, 75, 172. Important area, obviously, to hold, to keep on coming up and try to tackle this controlling high right here. Important chart. Netflix. Bottom box held. Middle is holding. Gap. Gap. Close this gap. Not this one. Not this one. Double gaps. This is how they've been moving the market. And obviously, resistance just ahead. And we've got gap up here, gap over here. So the leaders, in my opinion, have been used to help move the market again. And that was, in my opinion, suspicious. Usually you don't get the same leaders to lead the next time around, especially after a 20% correction. Here we have Tesla, and we can see this has not enjoyed the same benefits that the others have of this market. We've been selling off. Lower lows, lower highs, gaps, gaps, gaps. So some things that we've all been reading about certainly haven't helped this stock. But you can see right now the double is holding. So you've got to keep an eye on last year's low. That's support for now. And then a double right back in here. Whatever methodology you use, I believe you should be able to use it on charts of varying sizes, different swings, different time frames, and different products, including stocks, ETFs, and whatever. So in terms of reinventing the wheel, good luck with that. If you're new and starting out, you'll probably be better off getting a few lessons from people that have already experienced the things you have, and then take it from there and make it your own. So that's not a plug for my work or anybody's in particular, just, you know, telling it like it is. Why do people send their people to colleges and universities to study to become doctors? And, you know, would you want a heart surgeon to work on you if you'd never taken any classes, or you want him to go out and trial and error, figure it out? And, you know, your daughter or your son is the one that he's experimenting on. Yeah, a little common sense goes a long way in this business. Whatever your level of trading ability, if there's something I can do to help you, feel free to get in touch. e@emonywizard.com. Whether you're a seasoned veteran, run a prop shop, run a hedge fund, or just an outright beginner starting out, get in touch. Let me know how I can help you. Have yourself a great day. I'm headed to the pool, and I'll catch you guys tomorrow on Twitter and out there in the markets. Be well.